The IRS just raised the state and local tax deduction cap from $10,000 to $40,000 for tax year 2026. If you own a home in New York, New Jersey, California, Illinois, Connecticut, or Massachusetts, you could get $4,800 back next April. Most homeowners will miss. Here's why this matters right now. For the past 7 years, the SALT cap sat at $10,000. That meant if you paid $25,000 in property tax and $10,000 in state income tax, you could only deduct $10,000 total on your federal return. The rest vanished. For married filers, the standard deduction. Before we run the numbers, here's the trap that costs high earners this entire benefit. The new law phases out the $40,000 SALT cap, starting at $500,000 of modified adjusted gross income. That's your gross income minus things like IRA contributions and student loan interest. If you're married filing jointly and your modified adjusted gross income hits $750,000, your SALT cap. Now the calculator. Pull your 2025 Form 1040 and Schedule A if you filed one. If not, grab your property tax bill, your state income tax withholding from your W-2 Box 17, and your mortgage interest statement, Form 1098 from your lender. Add 3 numbers. First, your property tax. Let's say you own a home in Westchester County, New York. Median property tax there is $24,000 per year. Second, your state income tax paid. New York state tax on $120,000 income is about. Compare that $66,500 to the $32,200 standard deduction. You beat it by $34,300. That extra deduction reduces your taxable income by $34,300. If you're in the 24% federal tax bracket, married filing. Here's your 3-step fix to claim this by next April. Step 1. Pull your 2025 tax documents now. You need your property tax bill. Check your county assessor website if you lost the paper copy. You need your 2025 W-2 Box 17 for state income tax withheld. And you need your mortgage interest statement, IRS Form 1098, which your lender may. 2 edge cases before we close. First, if you prepaid your 2027 property tax in December 2026 to bunch deductions, that prepayment counts toward your 2026 itemized total. Some high-tax state filers do this every other year to swing above the standard deduction threshold. The IRS allows it as long as the tax is assessed. Check IRS Publication 530 for the rules on real estate tax timing. Second, 9 states have no income tax. Alas, one action this week: pull your 2025 property tax bill, your W-2, and your mortgage interest statement. Add the 3 numbers. If the total is above $32,200 and your household income is under $500,000, you're itemizing in 2026. Mark it in your tax file now so you don't default to the standard deduction out of habit. The IRS published the final SALT cap rules in their One Big Beautiful Bill provisions page. I've linked that below, along with IRS Publication 530 on deductible taxes. If this breakdown saved you time or money,